Greetings, my name is Kevin Matthews and I am the tax professor. Remember, class is still in session because the learning never stops. So today we're going to talk about the American Opportunity Tax Credit for qualified tuition and related higher expenses. The AOTC, as we call it in the industry, is for qualified tuition and related expenses that may allow you to save on your taxes for higher expenses that you actually have. And the way that it works out is that, and not to get into too much of a history lesson, but back in the day, back in the 90s, President Clinton actually, proposed having a tax credit called the Hope Credit. And the Hope Credit was kind of this idea that if you wanted to go to a junior college, they were going to cover through a tax credit a big chunk of the expenses that you would have is going to junior college. And so it was the idea that they had at the time. He wanted to really push this idea that we would have free junior college for anybody who wants to go, just so that they can have an opportunity to push into the higher education. And so over time, obviously, things change, and so Congress came up with the American Opportunities Tax Credit. And the way that it works is that the maximum that you can take with the American Opportunities Tax Credit is $2,500. And the way that the calculation works on it is that you get dollar for dollar tax credit for expense up to $2,000, and then the next $2,000 that you spend on the education, you get 25% of that as a tax credit. And since the limit is per student and not per taxpayer, if you incur qualifying expenses for you and your two children, you may be as high as $7,500, which is something that I find interesting that a lot of people tend to forget. They think that a tax credit's only available for one, and they have to split it up amongst different people. But that's not necessarily the case. The American Opportunity Tax Credit is only available for the first 4 years of education. That was actually different than the Hope Credit that they were talking about in the past. So in general, it covers anything for a bachelor's or an associate's degree, if those are the two types of degrees that you want. There's certain vocational schools that are also eligible, and if you have any questions about those, feel free to reach out to us. So to claim the credit, the student must be an eligible student, which basically means they have to be enrolled in a degree or certificate program at an eligible institution, at least at a half-time basis. And the student must never have been convicted of a federal or state drug felony. Okay, so those are just some things that you either are or you aren't. It's kind of binary, and the way that you'll know this as a parent, if you to make sure that your child qualifies. I mean, usually you'll know if your kid's full-time or not, but you'll get a 1098-T, and that's basically going to have some boxes that are checked off to make sure that you actually qualify for those. So the credit is not allowed for education expenses that are deductible. So, for example, a business expense. So if you're going to college and you're going to claim that as a business expense, and I think I might have talked about this in the past, but when I left the Navy and I decided I was going to go into the tax industry, I learned very quickly that my knowledge of tax was not to the level that I wanted it to be. And so what I ended up doing is I said, look, I'm going to take a couple classes. I'll go to American University and take some classes in tax. Okay, now that was a graduate course, so obviously it wouldn't qualify anyways, but say for example it was an undergraduate course and it was my first bachelor's degree, it could qualify, but here's the thing. Typically with us in the CPA world, we can use those types of classes as our continuing education classes, which would make them eligible for them to be taken as a business deduction. And so if I'm going to take it as a business deduction, I can't take it as a credit. And so that's something that it needs to be taken into consideration. Also, if you take a distribution from a Coverdell or a 529, the money that is used to cover those college expenses cannot then be taken as a credit on the back end. And I think that kind of makes sense. I mean, the IRS, what they're trying to do is prevent double dipping, and you're getting tax benefited money because with a 529 you've got all this growth that took place that they're not going to tax. and in some states you're actually getting a tax deduction for that 529 money. And so, you know, it just doesn't make a lot of sense for them to go ahead and say, oh yeah, you can take that and the credit. That's just not, that's the way that they don't want to do that. So to be eligible for the credit, the expenses have to be paid for in the academic year which you're trying to take the credit for. So if you're going to pay for 2019 college expenses, those have to be paid in 2019. Okay, you can't wait till 2020 to pay them or pay those in 2018. If you pay them in 2018 and you try to take the credit in 2019, you're not going to be allowed to do that. And so you want to make sure that you meet up with the correct time. As we mentioned earlier, you're going to need a 1098-T, which is essentially a tuition statement. It's an official IRS tuition statement. Gets filed with the IRS, gets filed with, obviously sent to you, and then of course they retain a copy. But essentially what it's going to do, it's going to say how much you were billed, how much you actually paid, although many states, many schools will actually leave the amount paid as blank, you know, and that can be, you know, that's a double-edged sword. It could be a good thing, could be a bad thing. I really wish they would add it, but that's just, you know, just for my ease. And then there's going to be certain boxes that are checked off. Like I said, you have to be at least half-time, so that's going to have to be checked appropriately. You also have to be an undergraduate, which means that's going to have to be checked appropriately. And then there's going to be some other information that's necessary. You have to have the school's EIN, and you also have to have the school's address in order to be able to do that. The one cool thing that's really awesome about the Americans Opportunities Tax Credit is that 40% of this credit is refundable. Okay, so if you're taking, you know, if you've got, you know, $2,500, you can actually take $1,000 of it as a refundable credit, which essentially what that means is, hey, say for example, I'm a student and I'm paying my own way to go to college. Maybe I only make $15,000, $20,000 a year because maybe I'm still living at home, or maybe I'm living with a family friend that's helping me cover my expenses. What ends up happening, or even better, you're living on your own, but maybe your college is covering some of your costs, so you can actually live on campus and not have any problems with that. You're not making enough money to be able to have any tax, and as a result of which, what will happen is they're going to say, okay, we calculated your tax is at zero, you've got this American Opportunities Tax Credit at $2,500. What they're going to do is they're going to strike that, and they're going to basically give you $1,000 refundable to you for paying that credit. So it can actually be a really good thing, especially for students, because college students, I mean, $1,000 is a lot of money. You know, I mean, there's lots of things they can do with that in order to further their education. Qualified tuition and related expenses includes the following: tuition, books, academic fees, which are required for enrollment or attendance at an eligible education. They do not include, okay, so they do not include activity fees, athletic fees, insurance, room, board, transportation costs, and other personal living expenses. The cost of course involving or education involving sports, games, or hobbies also doesn't qualify unless it's part of the student's degree program. Qualified expenses for the purposes of the credit are reduced by tax-exempt scholarships and fellowships, certain military benefits, and any other tax-exempt payments that they receive. You know, and look, guys, I'm a military veteran, so I understand what they're talking about with certain military benefits, and I'd be happy to talk to you about that. Go ahead and leave a comment in the box below, or if you want to talk more one-on-one or private, you can feel free to reach out to me just going through my website. One of the problems that we have with the Americans Opportunities Tax Credit is it is subject to what's called a phase out. What that means is that if you make a lot of money, or if somebody who's paying all of your tuition and fees is making a lot of money and you're their dependent, there potentially could be a phase out where they're going to get a reduced credit because of that income, and then if they make more than a certain amount, they're not going to get any credit whatsoever. And for married filing joint, it's between $160,000 and $180,000. If you are single or head of household, the phase-out range is between $80,000 and $90,000. And then there's no credit available for taxpayers who are married filing separately regardless of their income. Okay, the American Opportunities Tax Credit is not allowed to be taken if you are claimed as a dependent on somebody else's tax return. Now, that actually gives us an opportunity to do some things. I would actually prefer to talk to you one-on-one on that, because if I were to try to get into the intricacies of what I would be talking about, it would explode this video by another 20-30 minutes, and I just don't want to keep it. I want to keep these short and sweet and to the point. So that's all I have for you today. Remember, my name is Kevin Matthews and I am the tax professor. Class is still in session because the learning never stops. If you want to reach out to me, there's a couple ways you can do it. You can leave a comment in the comment box below. It'll actually ring on my phone. The second thing you can do is you can go to my website. That's www.betasolutionscpa.com, and you can actually reach out to us, and it'll actually send an email directly to me, and then I can answer your question more one-on-one. And if we need to, we can even schedule a consultation either by phone, by webinar, or in person if that's how you would like to do it. Again, thank you very much for watching the video.